Thanks for staying with us. You're watching Tracking Trends with me, Nikunj Dalmia. Now on the stock, I'm just going to log in again. Just bear with me. Now let's start queries. And the first question we got, and we got Sanjiv, Bhasin to address it. We've got first question from Mr. Machado on Balrampur Chini. He's bought 90 shares of Balrampur Chini at 392, considering the ethanol ban that is now reversed. Where is the stock headed in the short term and post FY24? Bhasin Saab, good afternoon.
Yes, Nikunj, good afternoon.
क्या करना चाहिए?
सर दो सिनेरियो है. एक तो गवर्नमेंट ने रिवर्स कर दी डिसीजन, बट शुगर प्राइसेस globally have seen that there is more supply and prices have fallen. However, the startling thing people are missing is that Reliance has started adding a lot of bagasse as a coincident to for ethanol and blending from the molasses and the overdraft of that. I think Balrampur Chini on any decline should be a buy. If he is holding, please tell him to hold. There will be this small short-term volatility because of the recent correction in sugar as a commodity. But in the longer term, I think Balrampur Chini is a must-have in your portfolio. So continue to hold. You could look for levels of 450 coming in the next 3 months.
And Bhasin Saab, Balrampur Chini is like an efficient, debt-free sugar company. And if the ethanol business does not even contract, I mean the sugar business per se also, they have got very superior return ratios.
Correct. It is, I think, arguably the Infosys or the TCS of sugar, and very well managed by the Sarogi Group, which has been there since, I think, many, many years, and one of the most efficient players in this industry.
Bishwajit Chakravarti, and he's written from West Bengal. He's bought 50 shares of LIC at 885. Buy, sell or hold. Patinab, let's first hear your thoughts on LIC, then I'll chip in my inputs.
So see, I know this is a little bit of a damn squib that in a market which has gone to new highs, LIC may not have performed. But look, there is a new scape of LIC. Firstly, their ULIP has now become more efficient. Their transparency has increased. And some of their core holdings has done extremely well. Plus, you are aware they are the second largest bondholder in the country. And I think that over a period of time, it can do well. But I would tell him that if he gets close to his price, he should diversify into some of the efficient private insurance. So we think SBI Life and HDFC Life would be a better bet over a longer period. In the short run, like he said, if his time horizon is slightly longer, then LIC should start to perform.
The thing, Bhasin Saab, is that, at the beginning of the year, when Adani group of stocks is sold off, everyone said, okay, LIC is going to have problems, they will struggle in paying unit holders premium, their mark-to-market losses will be huge, balance sheet will take a hit. All those concerns have died. So my limited point is that if that concern which connected LIC with a lot of bad PR and gave them a temporary leg down, that concern is also over. So ideally, this also should, this is something which markets right now are not talking about it, but maybe they will like to talk about it going forward, Bhasin sir.
Correct. You hit the nail on the head, and that is what the chaos was, that LIC's holding dipped below its, issue. The paper profit booked when this Adani fiasco happened. But look, Adanis are hitting new highs, and I'm very sure the constituent of their portfolio is doing extremely well. Also, Nikunj, just to point out, New India Insurance is up 70% in the last 2 months. So I think there is some steam ahead. I don't rule out issue price being crossed in LIC. Hence, I would say please continue to hold.
Next one, Yes Bank, and we get a lot of questions on Yes Bank. This is from Sayak Banerjee from Bengaluru. He's bought 9,000 shares of Yes Bank at 21.59, 21.6. I bought at higher levels, but averaged it after Prashant Kopa's takeover. Is there a possibility for it to become a multi-bagger in future? If yes, please advise. Bhasin Saab.
So see, Nikunj, you have to take into account two things. One, Mr. Prashant Kumar has done extremely well from the SBI side as a CEO, and the bank has transitioned well into their loan book, into their recoveries. But the asset base is very large. The equity is now 40,000 crore, given the money which all the other bankers had to flow in when the crisis happened. it will take time for return of equity to improve. So ratios may take time. I think if you have a 2-year window, then you may actually double your money. But in the short run, it will continue to be a market performer. Results are good. Asset recovery is good. NPAs are on the lower side. But the equity base is fairly large. So for it to give you a return on equity, it will take some time.
And also, Bhasin Saab, the fact that Yes Bank is starting fresh, yes, they must have got their capital back. But you actually will have to build a franchise once again. It's like saying that, it's taken a rebirth. And it takes a time when a baby takes a rebirth before he can run again. I mean, first the baby has to walk and then run. So I think Yes Bank will take that time before it is able to run.
It is a very good brand in the franchise. It lost out, but now it has come back very strongly. And I think Mr. Prashant Kumar has done a commendable job in turning around the bank. But like you said, it has everything, from securities to all the other verticals. But like I said, the asset base, the equity base is fairly large, and for it to deliver on that, it will take time. So yes, 2 years should be your holding period minimum if you are looking for good returns on Yes Bank.
Right, Bhasin Saab, thank you very much. And thank you for joining on the show today. Thank you for watching the show. And next 1 hour of trade looks like things are looking up. I mean, recovery in the Sensex, almost at the highest point of the day. Bank Nifty is also catching up. So don't go anywhere. Last 1 hour of market action coming up.